As we talk about the way the markets are developing, obviously you guys have hit on a number of the key points. Earlier this morning, for those viewers who have been around since the 5 a.m. hour, we really saw the futures pick up steam. We were going to start the day off in negative territory, but right around that 5:40 a.m. Eastern time mark, as you can see in the charts up there, we got that spike higher in futures because of that headline coming out of China saying that there were going to be a trade meeting, a continuation of trade meetings, I guess, if you will, next week in Washington, D.C. That kind of put a little bit more of that trade optimism fuel behind the market. It's curious only because yesterday the S&P 500 closed pretty much right on top of its longer-term trend line or 200-day moving average. And that's one of the things that we're going to watch for today is whether or not we can see a little bit more of that follow-through. All of that, of course, comes in this backdrop of possibly bad retail data coming out of the U.S., worse than expected numbers coming out of Germany for its gross domestic product. But if you take a look at the push and pull that's happening, just take a look at the sectors so far this year to date in the S&P 500. The best performers have been industrials and energy, two of the types of sectors that you may not expect to see rallying so far off the lows that we saw from Christmas Eve to the first part of this year, if you expect to see a global slowdown or a slowdown at the very least in the U.S. and places like China and other emerging markets. Meanwhile, defensive sectors like healthcare and utilities have been the laggards. But every sector is up so far, so maybe good for the stocks in terms of the overall picture. Now, if you take a look at some of the other parts that we are concerned a little bit more about, it is the idea that we are seeing the Russell 2000 up about 15% year to date versus the S&P 500's 10. These are both great starts, but as you guys have pointed out, the Russell 2000 is on the verge of exiting what some traders call correction territory. That was that 10% drawdown. So maybe not a surprise that small caps are leading in a more bullish sentiment. The issue now is whether or not that momentum can stay. Over the course of the past 4 or 5 months, we've seen the S&P 500 at least top out in the next 50 or 60 handles or so. This area in the market will be an area of slowing momentum to see if we can reclaim some of those levels to punch beyond to get back to record highs. But there is an economic narrative, folks, that is working against the markets right now. We'll see if that retail sales data was just a blip and whether or not the growth slowing numbers coming out of places like Asia and Europe continue to weigh on the markets a little bit. Right now, at least the markets are feeling a little bit good in this neutral zone, so to speak.